Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show for you. I mean, you guys loved Cody last Friday, so we're bringing him back this Friday for, we're gonna have Cody Fridays from now on, Gay Fridays from now on, between him and Austin and maybe, I don't know, probably there's other yays out there. Anyways, we also got my good friend Mike Iuliano, and we're gonna be going through this technical analysis work on stocks. Now, I know half of you are probably going to click off this video right now because that shit is boring. Yet, stay tuned because at the end of this, we're going to do a live trade and we're going to go through the technical analysis. And yeah, we're going to go through with Mike and do that. So I know Cody's here and Mike, and we're just going to get into it, guys. If you do like this stuff, comment down below what you're trading. If you've taken any of their courses, they both run courses. They both have Facebook groups. So yeah, say hello. Definitely smash the like button. And if you haven't, subscribe.
Smash the like button.
There you go.
Yeah, so I'm just going to start off with a couple common questions I get from my student. I'm pretty sure Mike gets it as well. So the first question is, does technical analysis actually work? So feel free to jump in, Mike.
Well, I think we'll probably both have opinions on this, but I mean, for me, it really depends on who's doing it and what your skill level is. So I like to use analogies. I thought learning guitar was impossible, but until you learn to do it properly, it may seem impossible. And then once you've actually learned it, that sheet music actually looks like a song. So to someone who's not prepared in the right way or hasn't maybe been taught in the right way, it can seem impossible. But to answer the question, I really do think technical analysis works. It's just not something that you're ever going to hit 100% of, and a good baseball player doesn't hit every pitch. So you have to have exit strategies while you're doing your technical analysis.
Well, that takes us right into, with it, do you use stop losses?
Yeah.
So I do and I don't. So I mean, the more risky the stock or the more volatile the stock, the more likely I will be to do that. And am I going in to try and scalp out money in a few days, or is it a longer term investment? So depending on what I'm doing, and then also I work for myself. I'm sitting at home. I'm able to have the computer in front of me oftentimes. Someone else might be in an office from 9 to 5 where I would definitely use stop losses. So I think it just depends on everyone's personal situation and comfort level.
Yeah, because I don't sit and watch my phone all the time. Like I do other things. Like I do videos. I go for lunch. If you follow me on Instagram, you'll see that a lot.
He goes for lunch a lot.
I do go for lunch a lot, and it usually turns into a bottle or 2 bottles of wine. Anyways, and yeah, I'm not looking at my phone the whole time, right? So I put my preset wins in and my preset losses in, and yeah, I go from there. But what other questions are your students asking there, Cody?
Well, I guess another common question I get, or Mike will get, is do you prefer, making money consistently, with less gain, or do you rather make big wins on some times and getting stop loss on other times, right?
I mean, for me, I like to do a combination of both. So in general, I've taken an options course and they teach you all the avenues. Some people will stick to just selling puts for different reasons, and some people will stick to maybe just, buying calls or doing something else. Yeah. At the end of the day, you have to choose your own comfort level. Some people, if you invest in real estate, they're not going to buy a student rental. They're going to buy a nice, clean, shiny property, get a good tenant in there, and they'll make a slow return on it. And if you buy a student rental, you might buy in an area where it might appreciate more because it's near a school, and it might be something where you're going to make more cash flow, but you have to deal with the problems that come with it. So what's your tolerance?
Well, and we talk about this all the time, or I do. You can take all these things, you can read all these books, but you have to develop your own style.
Yes.
You have to develop which stocks you're going to follow, what your risk tolerance is again. Yeah. And I mean, I tell people that all the time. It's like, okay, a lot of people ask, why doesn't everybody do this? If it is so easy,
yeah.
Like why doesn't all the people who are doing private mortgages at 12%, right?
Yeah. And
to some people that's risky.
Yeah.
And to them this is risky. But I know that, at least myself personally, I used to do private mortgages. I've taken all that money out. I put it in here, and I know I was with Larry the other day, and he was a mortgage broker, and he taken all his private money and put it in here too, right? So, again, you develop your own strategies, right? And by the way, anything we say or do on here is not financial advice.
Not stock advice.
Not stock advice, so do your own due diligence. And the trade we're going to do later, listen, this is Wednesday, that's going to be Friday. It might not be set up the same. So
yeah, and then just to add on to that, that's where, like, before you develop your own style for beginners to start, that's why it might be beneficial to take my course or Mike's course or whatever that is, because everyone has a different style, and when you're starting out you might not know what to follow. So it's good to have a guidelines, have a consistent good track record, and that's where you start, and you can start develop into your own strategy from then on. But you can gain the confidence from seeing exactly what we do, right, and then build up from there.
yeah. So we were discussing this before we came on. Was their course too cheap or was it too expensive? I think all 4 courses I know you could probably take for $10,000.
Yeah.
And if you're good at this and you put $10,000 in, like, you could easily make that money back. I'm going to be conservative and say 2 years.
Yeah.
You can easily make that money back in a year. Like, I know people that have taken these courses, they're up 200-300% this year.
I have a coaching student that made $16,000 this week because of a pick I made. So,
yeah, like, because of a stock chart that Mike had and a coaching client, he made $16,000. So if you took a $10,000 course and you made $16,000 in what day?
Well, my course isn't even $10,000. So
No, I'm just talking about all the courses that I know of that you can take. Plus, there's other ones out there, obviously.
Yeah.
I'm sure there's people advertising on my videos now that are offering options courses. So,
yeah.
All right.
And then just add on to that, really account size could play a big factor. So the bigger your account, generally you can make more money, but at the same time, if you don't know what you're doing, you could lose more money at the same time. So, $16,000 might not apply to your account, but generally a bigger account makes more money. Okay.
And the other thing is, too, I like to use analogies a lot. I mean, if I have a rental property, I have people who have told me rental properties are terrible, you're never going to get your rent money and all this stuff. But they've been in a situation where they allowed someone to build up maybe 6 or 12 months of rent owing, and they didn't do it properly. So they didn't use a stop loss for real estate. If you don't use a stop loss for your stocks, you can be caught in a situation you should have never been in, and you'll have a skewed view of what really student rentals or stock options are really about. That's the way I look at it.
Yeah. Well, and that's true. Like, maybe you took a loss on the stock market. Or maybe you're a fund manager at a bank and you were told during training that options are bad, are risky, right? Yes. So that's just what you tell your clients. I mean, if it's good enough for Warren Buffett, it's good enough for me. That's how I put it, right? And he does a lot of options. So
yeah, and at the end of the day, just getting more educated will help reduce all types of risks. You can't reduce your risk with all the ignorance of not getting yourself educated. That's really the first step, whatever that education is, right?
Yeah, I mean, just if you guys want free, because I know everybody likes free, I mean, we'll link Cody's Facebook page here. We'll link Mike's Facebook page here. There's thousands of people in those groups that are posting their trades daily, that are talking about charts daily. I mean, that stuff obviously is, it's working for them, right? So
yeah, they can ask questions, general questions. People help you out, and we promote a very positive vibe where we want people to help others out while they mastering their own strategy, where people can critique in a positive way, right? Now we're gonna put Mike on the spot to ask him to give us a live trade. Again, not stock advice. Okay, this is basically at this point. It will be a historical fact by the time you see it. So at this point, we want Mike to give us, let's look at a stock that a lot of people are looking at, and how does the chart looks like, and what type of strategy will he actually use. So we're just gonna.
So just saying, I'm going to do a live trade on my phone with this. So I will screenshot this because I don't know how to screen record on my phone. And
pressure.
Yeah.
So. I mean, it may be this. So we have Zoom communications. We have the chart up.
Okay, so when I'm looking at a chart, so this one here in particular, this is a 1-year chart. So it's accounting for the COVID drop. I don't want to just take a partial section of the chart, in my opinion, because I want to get a full view of the move that happened after the most recent drop.
Make that full screen.
Okay, so when I'm looking at it, I want to try to capture the most recent drop that happened before this bull move, so I can get the whole bull move and analyze it as one whole unit. So, right now it's pretty obvious we had a drop in March, but actually on the Zoom chart it's not, because Zoom did wonderful. COVID actually helped Zoom because people went from the office to the video. So in this case here, the Zoom drop wasn't even that bad. It kind of happened over here where it dropped during COVID and then it rallied ever since then. So when I'm looking at the chart and I'm watching it, I'm saying to myself, what has the general trend been after the COVID drop for Zoom video. Okay, and this is a stock that obviously has done well, but you can see it's in a bull trend. And if I take that away here, so when I'm drawing my trend line on the bottom here and I carry it through, okay, so when I'm drawing my trend line, what I'm seeing is that basically there's an area where we've taken support off of this black line multiple times, and we've just come to it again, okay? So we've dropped just below it here. And when I'm looking up at the top of my screen, I notice that the RSI is pretty low as well. So historically, there's different times when the RSI will get low, and there's another one over here where it got pretty low. And if you notice, it often lines up with the dips on the chart. And in this case here, I believe we're at a point where the RSI is lower than it was in August. And if you go back to the COVID drop, the RSI is lower now than when COVID dropped. So RSI represents how overbought or oversold something is. I think this is much more oversold than overbought. This is towards the lowest. It's been lower than COVID. And what I do know as well is that they run on earnings, because Zoom Video is earning more and more money as COVID continues. And right now we have rising COVID cases. I like Zoom Video still. I have no reason to dislike it yet.
Well, I mean, so I think this drop is because of the vaccines.
Well, the vaccines are, people are saying that maybe you won't have to use Zoom Video as much, so to speak. I mean, right now they're about to report earnings, though, and the earnings are going to be based on what's already happened.
Exactly.
So I feel the earnings will be a
and
positive.
forecasts, obviously. Yeah. And yet, yes. I think everybody's still going to be using Zoom at least for the next 9 to 18 months. And then even then, like we've already heard, like people aren't going back, like whatever people aren't going back, right?
Yeah.
So
exactly.
I think fundamentally, actually, because of COVID, we fundamentally changed the way we work. Fundamentally change the way we spend as well. So I'm not totally sold on this sector rotation stuff yet. So I still think Zoom will have its value. Even I'm running my course on Zoom as well. Not sponsoring them or anything, but that's just what I see, and it's very easy to use.
So what's our trade here? So I mean, I see that we have a resistance line there, right?
Yeah. So you have an area that used to be resistance that is becomes support. So when I'm looking at it, first of all, there's an earnings that happened over here, and we went and we gapped up. That gap will actually act as support. So there's actually an area of support, in and around and just above that level, so to speak. Okay.
What's that, 350-ish?
Yeah. So there's a gap between 350 and 325. So there's going to be kind of a band of support there.
335 maybe.
Yeah.
Now, when you're picking your options, sometimes the clean numbers like 350 or 325 or 300 will be more popular. If you pick 335, it's usually not a very popular number. So when I'm looking at it right now, I'm saying
335 has the most open interest, other than 355.
Thank you. You're welcome.
Yeah.
What's the volume?
293 on the bid and 166 on the ask.
Okay, that's not too bad. So people are watching that level.
Is that for call or is that for put?
That's for puts.
That's for puts.
For puts.
Okay. On the buy side, it's 148. On the call side, it's 148, 16 or 68. So
So I think at the end we'll ask Mike what type of strategy will he use at this point, and what strike price, what expiration day, and all that.
Yeah. So and as you guys know, I'm typically a put seller, so I'm going to be taking Mike's advice here.
Yeah.
So here's the way I'm looking at the chart right now. So the black arrows on the chart that I just drew there, those are when they announced earnings, the last 2 earnings, and it happens at the end of the month. Okay, so we're now 3 months forward. At the end of this month, they're going to announce earnings again. So let's see what happened in the past and see if there's any kind of a pattern for that company or the investors who invest in it. So we have the last earnings here where the company peaked and then went into somewhat of a downtrend or consolidation. And then it rallied up just going into the earnings. So you see that earnings day? It actually rallied up leading up to that announcement. And then the black arrow shows the earnings, and it went up a couple more days after that. So the all-time high, which was over here, got exceeded. And then when I'm looking at the next one, I'm looking and I'm seeing that we also consolidated or dipped, so to speak, leading up to that earnings. And we actually ran all the way to here before the earnings was announced. So it actually went above the all-time high again, right? So we went to the all-time high, 2 cycles ago. In the most recent cycle, we went above the all-time high before the earnings was announced. And in each case, we had a dip and then a rally to the earnings. So what do we have right now? If I look right now, I see that we have a dip, right? And then we have earnings coming up in about 2 weeks, and it tends to run into the earnings. And I see really low RSI. It seems oversold, even though the vaccine eventually will take business away from it. I believe it currently is going to report great earnings, and we'll still have some good earnings coming. So I'm not really afraid of it dropping and sustaining the drop. If anything, I feel that it's repeating a pattern, and we might rally into earnings again. Okay, so that's my thesis. That's my premise on it.
Yeah.
Okay. Now, how do you action that? And hey, Mike, is there a breakout signal on your chart or a buy signal on your chart? I would say no. So this is something where some people might get in deep in the money and do a call option on this, because currently those will be priced cheaply. If you wait for the signal, you're going to pay for that call contract much more so than you would now.
Yeah, because when the price start moving fast, your IV will spike, and then you pay more for the premium as an option buyer.
Exactly, and the price will be higher and closer to, you know, into a bull rally. Right now, people might fear that it's going to drop more, so you actually get paid more to bet positively, right?
Correct.
So, you know, should Mark do a call option right now? That's up to him. But, you know, maybe he might want to sell a put and recognize that you have a massive amount of support, like we just talked about. There's a huge gap. I also already feel it's oversold, so why not try to target that 325, 350 area for a strike?
So just looking at this right now, take a screenshot of this right now. So the bid ask is, so I'm going December 4th because I'm going just after earnings, because I want to get that volatility of earnings. And basically I can sell a put on this for $14.
What's the strike price?
For $350.
$350
for December
$14. 4th. So December 4th is about like 2 weeks away.
Yeah, that's 4% for 2 weeks.
So 4% for 2 weeks, 8% per month, 96% annualized return, roughly, right? So if we make that trade, we succeed. That's how much of a return we're looking at.
What's the delta?
I'm gonna guess the delta is probably going to be around 0.2, 0.25. I'm guessing at this point.
See, one thing that you can do too, you could try to price compare your different dates and your different option prices to find a higher delta as well, potentially.
335, so...
I'm looking at 350. But
oh, 350. See, the delta is 0.25.
Yeah.
I was bang on. Yeah, so the premium for the bid is 13.8. The ask is 14.3. I just say we can get it for 14. So if we sell that put at this point.
So I just put the order in for 1405.
1405. So right at the mid, right?
Yeah.
So if Mark get filled by that position, that means he will get paid around 14.5 times by the 100. So $1,400 for making this trade, and if the price stays above this, then you will make a good $1,400 divided by 350. That's roughly 4% in 2 weeks, right? And annualized return to about 96%.
By the way, the trade just got filled at 1405. So.
Great, yeah.
One thing to point out here too, so sometimes when I message Mark, I tend to do a lot of buy signals or breakout signals where I'm literally expecting the action to move up very, very soon. That's not the case here. So, you know, if that was the case, for example, he often will sell a put because the price will spike up and he gets decay and he has the ability to exit sooner, rather than a boring pattern that hangs out sideways, which is more what we have today. He might get stuck in this longer but still make money. And so sometimes when I sell him a chart, he gets excited because he thinks it's a really easy way to sell a put.
Yeah, I know. Typically, I'll sell closer to the money.
Yes.
Like I'll sell, so this is what, 10, 14% away from the price right now.
Yeah.
So it's 14% decline, which obviously in a stock like Zoom could happen in a day. Getting paid good money for that.
So what about what Mike would do? What would you do? Selling a put, or would you buy deep in the money call? Would you just buy the stock outright, or what would you do?
So in this case here, you know, I happen to have a certain opinion on where the market's going and the Zoom video where their earnings are going. So I'd be okay taking a call here, but the safest thing would be to sell a put and to wait for an entry on a call option, maybe on a more obvious momentum move. Otherwise, I might be holding that call option where it's not doing anything for the next week or two. And maybe during that next week or two, I could be making money elsewhere. I'm more worried about paying more for the call option because I just think this is going to turn around leading up to earnings. I have a catalyst.
Yeah.
So
Yeah.
I'm more afraid of paying more for my call option. And I like taking the call option now, and you could still sell a put. You could do both.
Yeah, and I'm probably going to look next week, like leading up into earnings. I'll probably look again and see if it rallies up into earnings again, like if it breaks that kind of little trend line there. That's kind of what I'm looking at to enter into a call.
Yeah.
I don't buy calls per se. I'm more naked puts. Yeah, so.
Yeah.
The only other thing I would say too is like, I mean, right now I don't see necessarily a rally or a buy signal. I see more of a holding pattern. If I see a rally signal or a buy signal pop up, I can actually sell another put with, in my opinion, a little bit more confidence that I'll cash out of quicker, and I will already have won on my previous call option, my previous sold put.
So basically, yeah, basically what he's saying is if the price rises, Mark buys back, closes out his position, and then I can re-enter in at a higher position and get paid again.
Yeah.
Mm-hmm.
And so I get time decay and I get price appreciation and I lower my risk.
Yeah.
And that's what happened each of the last 2 times leading up to earnings, that I could literally point out signals where if you had bought a call or sold a put, you would have made money, in my opinion. So that tends to be a lot of what I rely on.
Yeah. All right, guys. If you guys like this video, if you like having Mike on, and you want him to do a one where I actually buy a call, then comment down below if you want to see that. I mean, I don't know if Cody's going to be a regular addition here. We'll see. I mean,
see how this video does.
The ladies didn't like him as much as they liked Austin. I don't understand why.
Hey, my videos are getting up there,
I know
right?
they are. I'm just teasing you.
We're Yeh brothers, yeah.
Yeah, the Yeh brothers.
Say yeah to fire. So you say yeah to fire. Fire's on the side. Yeah.
All right. So, guys, comment down below. Follow them on Facebook and in their Facebook groups. We're going to link that. Thanks, everyone. Have a great weekend. And I'm sure this might be one that you might want to watch over and over and over again. So please do that. Catch you next time.